Welcome to the Hog Market Talk podcast, your weekly deep dive into hog market fundamentals, breaking news, and industry insights. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
All right, today is February 5th already, Luke, but let's talk about the crazy week we've had. Insane volatility across a lot of the commodities lately, whether it was gold last week and its crazy ride at the end of the week, or here yesterday we saw Trump's comments about his call with President Xi, sending the soybean market up nearly 50 cents yesterday. And being on the Hog Market Talk podcast today, I find all of this relevant, especially on the meal side, as we've really rebounded there. So insane volatility across these commodities, and even the outside markets on the macro side, just S&P moving all over the place. I wanted to get your take on that a little bit, and then just talk about, we've been out and about a lot this week. A lot of folks are out of the office, whether we be at the NCBA conference, CattleCon down there, or yourself, you're gone to a conference there at Pigski as well this week. So I just wanted to see what the tone is at these shows that you've seen here this week, and just talk about what other people are talking about this week in these crazy market environment.
Yeah, absolutely. A lot of volatility, just geopolitical risks, trade risks. Those are good reminders on why we manage risk, right, Mike? This past week, just got back last night. We had the opportunity to go out to Pigski Conference in Colorado. It's put on by Swine Vet Center. They did a great job with it, and just continues. We've rolled through now. We had South Dakota Pork Congress, Iowa Pork Congress, Pigski. Next week we'll be at Minnesota Pork Congress. So any of our friends and industry customers, whatnot, at the Minnesota show, come see us. But Mike, the tone continues to be positive. That's not a new thing. 25 was a good year. 26 outlook's good. 27 outlook is now starting to look good. So. I think if I can maybe talk about, just a little bit on a bigger scope, we've held our sourwood relatively stable, Mike, and health issues continue to put some variation in supply, and it's no different this year. We're having health challenges. PRRS continues to seem like it's bigger, badder, and tougher each year. But I'd say what's different, it was. Out at this conference, we talked a lot about succession planning, long-term growth strategies. They had some nice topics in that, but just also, how are your assets positioned? Where are your sow farms? Where are your finishing barns? And, I'd say it kind of started, it's been a slow tone, but I talking to contractors, talking to people doing bids, people are thinking, it's getting to the point where people are thinking about maybe doing a little bit of reinvestment. Now, I want to say growth. There's always going to be some growth with that, right? But I just think you look back at at our industry and the profit we had in 25, and like I said, the profit curve forward. It's just some comments from some contractors is the activity they've had in bids for either new projects. That's one. A lot are remodels, right? Mm-hmm. We've got depreciating buildings, but we haven't really built any amount of new facilities for 5 years in this wine of a grander scale, right? Especially on the finishing specifically. So, as we're starting off 26, people are going, finalizing their CapEx plans or executing their CapEx plans. Where, our industry over time with this kind of run, we typically expand or grow in a little bit. Mm-hmm. So that's, I think, just something to watch out. Supply, demand structures are awesome in our industry, Mike, and can still continue to be awesome. But, I think there's a few different things getting kicked around. So, let's all be mindful of what we're doing to optimize and put each of our own businesses in the best position. But, we're keep an eye on long-term plans, because there's going to be some things happening.
More people are starting to just look at a little bit of construction here, and that's been the question is we've had a little bit of a good time now for a little while, just kind of made up for the stuff we lost there a few years ago in the hog industry. How long is it going to take before we start to build new construction again? And it seems like people are poking around now, doesn't it?
Yeah, new construction. And also, hog barns are depreciating assets. You have to reinvest them so they don't depreciate to zero, right? So we've got some capital back in, we've got some returns. So, upgrading and reinvesting and extending your assets life with some investment this year. It's just, these are all the good things and the things a growing industry needs to do, right?
So that health, did you hear much on health?
Yeah, I mean, continues to be streaming around. PEDV is absolutely, and that's not a new thing. Like, I mean, learned at this conference, right? Because you see it in the U of M database and our clients. But PEDV is worse than a year ago. There's no question, and it's a little confusing on why it is, because there's a lot of things about PD that are really controlled with strict biosecurity protocols. But PEDV is absolutely worse than a year ago. So no doubt with that, and PERS, PERS is definitely in its heightened cycle. I like to say, is it worse than a year ago? I don't know. I think it's tracking with a year ago. Is it worse than the 5-year trend? But it's absolutely moving along. How long does it last? How deep in the in the spring and summer? Last year it went to July. Will it be that virulent this year? But it's definitely having an effect on supply. Near-term supply weights are coming down a little bit. Kills are coming down. There's been a few weather issues with that, but multiple packers bidding on cash hogs. That's all good. Pork cutout, it's bouncing around a little bit here this week. The belly primal but pork cutout demands, in a really good spot. And the futures curve just continues to push higher and higher and higher, and margins continue to move up and up and up, and just the pork industry's got a really solid undertone to it. It's in a really good spot right now, but also manage money, up their long position. Again, I don't have it in front of me. I think around 110,000 contracts or something like that, increased week over week. I mean, it's a really good opportunity to lay off some risk too, right?
It seems like, especially across all the proteins right now, they kind of have max long positions, whether it be hogs, cattle, feeder cattle. This protein complex, they've built up a pretty big long position, it seems like.
It does, and for big reasons, but things can change in a hurry, right? And whatnot. But the protein complex in general, it's and honestly, not only in the cattle and pork but the poultry the chicken meat I mean, chickens they're having a growth year as well too. So
they're the big benefactor, it seems like, of high beef prices lately, doesn't it?
They seem to be able to move pretty quick in supply, and they're really good at marketing. That is for sure.
Especially going into the Super Bowl this weekend, that seems like the big weekend for the chicken wings, especially.
Yeah, it is. I suppose chicken wings in about every household. They should be eating pork wings, in my opinion, but
very much so. What else can you tell us from just a market perspective this week? We've seen a lot of volatility in a lot of other commodities, and I'm curious what you're seeing on the hog side, Luke.
Yep. Like we kind of hit on quick. I mean, cash 87, I think 88.50 maybe.
It's been really good, right?
Yeah, I think that maybe posted yesterday afternoon. But good hog demand, multiple packers participating. I'd say the first 4 weeks of the year were slightly higher than a year ago on slaughter, and then weights started coming down, and we've had lower slaughter rates here now last week, I think, and this week year over year we maybe slightly over harvested the supply's tight. I think that's a combination of a lot of different things, but supply seems to be a tailwind here right now, and like I mentioned, product demand, it's good. I mean, it was down $4 yesterday because bellies were down 20, right? So it's at 93. It was 97 the day before. Pork demand is still hanging in a really good spot. And, the futures curve, when you take a look at futures, and you've got, July futures at 111.35, I suppose, a target on the charts would be around that 114, just shy of it area, right? October at 92, Dees, even further out in the deferreds, posting new contract highs here every day, close at 82.42. Yeah, it's just in a really good spot. And yes, we had some fireworks and beans. I was actually, I was presenting yesterday, and I looked at the bean market before my presentation, then after the presentation, I'm like, what happened? Trump must have said something, because man, in that quick time frame, it was different. But
if
even
you
with
pull up the minute chart here, Cade, you can see yesterday at about 9:38 a.m. is when he put that truth post out, and you could just tell. I mean, there's a right there, basically between 9:30 and 10, it put on about 50 cents plus, so from the move that we had earlier in the day. So a very, very extreme move yesterday in a very quick hurry. But meal, that was obviously impacted from it, and soybean oil.
And soybean oil, and talk a little bit about these 45Z credits too, right? That's kind of some bigger news in this week, Mike.
It could be, yeah. I think the big parts were obvious. things, which they're not going to be able to use feedstocks from China for the 45Z credits. This isn't Q, which Q would be more along the lines of the pipeline and those types of things. This is just moving a tax credit basically to the ethanol plants rather than the blenders, which it was before. So at this point, nothing new. It still has to go through the process and get approved and everything. It's early stages, but we're talking about it again. We've been talking about E15 seasonally lately a lot more. It seems like on the biofuel side, it's just getting a little bit more help. And it makes sense. Stage of the cycle, 3 years ago when 45Z was first announced, corn was like $7, right? Mm-hmm. So it's just not the phase of the cycle to be talking about, let's find ways to increase demand. Now you're getting into big ending stock situations in the United States. It makes more sense that we're going to try to find a little bit better ways to increase corn demand. Yeah. And one of the ways to do that in a very easy, consistent lever would be domestically through gas, fuel demand, just on ethanol and renewable diesel. And this administration is definitely not a huge priority to be a little bit more about alternative energy sources, greener energy. But at least if the next administration or the one after it is maybe on the left a little bit more, you'll see more of those policies start to be relevant again. And at this point, I think this administration does at least want to help agriculture. And, the pork side doing pretty well. Cattle guys, they're really optimistic. Like at the NCBA conference this week, they're feeling good. They talked about how the atmosphere of the show was really good. The grain guys it's not awful yet, but it's probably it's not the same tone. So it makes sense that we're going to talk about things like 45Z or trying to increase exports here a little bit. But on those topics, I do want to bring something up, which would be, you mentioned some of the primals a little bit. I want to talk about the ham specifically with how one of the mailbag questions we had here. If you ever have questions, guys, just email into us at the show. Is Mexico and the USMCA? Are we worried about that in the ham trade going forward? And is this a tomorrow problem or is this like the next year?
Yeah, for sure. And actually, I think, that I'm glad you brought that up. And I kind of wanted to end this podcast with this because, like, the pork industry, we have tremendously good things going on. Mm-hmm. And it's bullish kind of news all over the complex, right? But that from a watch list from ProAgs or from our perspective, USMCA and where we stand with Mexico, that's our biggest concern for this year. And, it's up in July and Trump's been very, he wants to change the deal up, right? And, this anti-dumping taste that's going on now that Mexico's filed, that's a positioning for USMCA negotiations, right? Mm-hmm. And yes, Mexico long term, they're in a structure, they need our hams. It will be a good market for us, but it doesn't mean they can't do some things to put some pinch points on short term, right? And unfortunately, it's just, we've seen it in China with the soybeans, and sometimes food gets weaponized, if you will, as a political tool, as a political tactic, right? And if this USMCA thing goes sideways, and we get in a spot where Mexico drops some ham demand, we've got to clear that ham elsewhere, domestically or other export markets, lower price. So, that, and we just saw with, again, it was a tweet and, buy the rumor, sell effect and all that in the soybean complex, right? But mm-hmm. we need anything as a hog producer. If Mexico comes up, you need to have ears up and be listening because it is vital. We export 25% of our production, and Mexico is by far our largest export customer. So, I think all ears up on that. Again, as far as these markets are good, right? But we hedge for things we can't see. We hedge to manage risk in our business. And, if we hit some road bumps with Mexico, there's going to be some pain points with that. So all eyes on that. We're watching it. But as we, like I said, when we look at what is one of our biggest, besides the obvious, and I knock on wood every time I say this, foreign animal disease, African swine fever, something else that closes our borders down, that we have that constant risk. But Mexico's concerning. I think we'll get it figured out. Trump and Scheinbaum have seemed to always kind of get that done through this administration so far. But that's a big deal. That's a really big deal for us, Mike.
Same on the corn side, too. Mexico, obviously, top number one buyer of U.S. corn. They buy about 90% of their corn needs from the United States. Corn exports have been incredibly hot this year, so especially to Mexico. People are worried a little bit about why would they be front loading. If they are going to pick a fight with us, it might be in their interest to try to load up a little bit more.
For sure.
So thank you for your time today. Any final thoughts?
Yeah, hey, Minnesota Pork Congress next week. Come see us in Mankato, Minnesota. It's a great show, and should have even a little bit of warmer weather coming at us, good for travel and all that. So have a great week, everybody.
Thank you, Luke.
Bye-bye.
And thank you for tuning in today. Before we wrap up, just a quick reminder here. If you're listening on Spotify or Apple Podcasts, make sure to check us out on YouTube as well. That's where we will post full video versions of these shows with charts and graphs and visual market breakdowns to help you follow along. Also, Riskology coming up February 17th on YouTube if you're looking to deepen your understanding of how agricultural markets work, how it's managed, and why markets do what they do. Please follow along on the Riskology series. It's a great place to start. And if you want to take it to the next step, we'll be hosting a Riskology boot camp at SDSU on February 18th and 19th. You can register for that on professionalagmarketing.com website. Thanks again for listening. We'll see you next time.